Hey everyone, how are you? My name is Enrique Abeda, and this is the HX Podcast. And I'm honored today to be joined by Gabriel Grego of Quintessential Capital Management. Gabriel is someone that I've actually known for the better part of a decade, which is about how long he's been managing his investment fund. And we met through a class that I helped my partner Whitney Tilson teach back in the day. First off, Gabriel, how are you this morning?
I'm doing fine. Thank you very much for having me. It's an honor for me as well.
And so, Gabriel, you and I have known each other for quite some time. I know a little bit about your background, but maybe share with our audience because again, you've got one of the more diverse backgrounds that we have that we see in money managers or many of our guests. Tell us a little bit about your story.
Sure. Real quick, I grew up in Italy. I finished high school in Italy. I went to college in the States at Tufts University. And straight out of college, I moved to London and I started working for a hedge fund actually in London. It was a very small one, a very small shop. And I was kind of disappointed. It wasn't exactly what I was looking for. So I kind of took a long break. I left London. I moved to Israel. I'm Jewish, so I had this dream of joining the Israeli army. So I spent the following almost 15 years in Italy. I served in the paratroopers at the IDF. Right after the MBA, I took an MBA, and then I tried a bunch of different careers that were always gravitating.
I want to make sure I heard it right. How long were you in the IDF?
I was for a little over a year. I was a volunteer.
Got it.
Yep. And after my MBA, I worked for Shell, the oil product company, for a while. And,
interesting.
Then I worked for the following 3-4 years in investment banking. I was doing advisory for leverage buyouts, project financing, and large-scale real estate projects. And eventually, something happened to me where, people sometimes say, oh, I had a bad thing happen, and then good things came out of it. So the bad thing was essentially the Great Recession, because the company I was working for was doing a lot of real estate finance advisory. And so we went into severe distress because of what was developing to be the Great Recession, essentially. And so
the global financial crisis, which I think it's now. It used to be called the Lehman financial crisis, but now I think they call it the global financial crisis. So.
Exactly. And unfortunately, so the company blew up pretty much. And so basically, I found myself in June 2008 without a job. And I figured, okay, it's June. I'm going to spend a nice summer. And then in September, I'm going to start looking for a job. And at the same time, a couple of years before, I started developing a hobby in basically stock investing and value investing. So I figured I might spend part of the summer in taking a course with a professor whose books I had written that I found very interesting. And this guy was Bruce Greenwald from Columbia University, and he was giving a 3-day intensive course on value investing. So I went to Columbia and attended this course. Which I found extremely interesting. And then, September came, and it's okay, I'm going to start looking for a job. And then Lehman Brothers collapsed.
Yeah, I was going to say this is June because we launched our fund. We actually launched our fund, my fund 360 Global. I think we launched on June 1st of 2008, which strangely enough was good timing because the markets were already such a mess that when we launched, we were very cautious because it's like it's almost like they dropped our ship into the middle of a hurricane. You're going to be a lot more conservative when you just got dropped into the middle of a hurricane than if you're sailing the sunny seas before.
100%.
But yeah,
100%. But at the time, I wasn't running a fund. Obviously, I was running my personal account. But it was clear that there was no way of finding another job in finance anytime soon, because it was clear that it was the beginning of a long-term recession and all the companies were firing, not hiring. And that's very good because I'm not sure that I would have ever had the courage to leave a high-paying finance job to try my luck into opening my own business. But in that case, I was forced to, because I said, okay, there's no prospect of a job for a while. Let us focus on running my portfolio. And then I started getting some money from friends and family. And I started investing it as the market was collapsing. And as you remember, since you had opened your fund as well, you remember that there were some incredible opportunities, from say September 08 all the way to September 09, say.
Yeah.
Some of,
Absolutely insane things. Yeah.
and I had like all the naivete of a new value investor because I had just started doing that. And I thought, okay, good, things are cheap, let's buy. And so I was
Right.
buying very
Right.
aggressively. I still remember I bought a lot of American Express at $10, for example. It's now I think 230.
Yeah.
I
Yeah. I'm
still
looking
own
at
it,
the
by the
chart.
way, and a
Yeah.
bunch of other things like that. So what happened is after a couple of years, I find myself with the initial capital multiplied a few times, and the fools that gave me money in the beginning, they were very happy, so they gave me more. So at some point, I found
Okay.
myself very quickly making more money out of the fees from the money I was managing than from the prior job in finance. And in addition to that, it's
Okay.
much better to be your own boss. So I
Yeah. Yeah.
started managed accounts, and then when it was big enough, I basically turned them into a fund, and the fund is Quintessential. And that's from that point onwards, the only notable things to say is that I started as a long-only value fund that it's not exactly exotic or sexy or unique. And at some point, I started exploring what at the time was this new style of investing called active shorting. And we tried getting into that. And I think I was lucky and very successful from the beginning. And that made me think that it was a good idea to focus on this also because it made raising capital easier because all of a sudden we had
Yep.
a
Yep.
almost unique strategy that kind of sold itself basically. And then, the following 10 years, I spent it essentially running this long book and looking for frauds and trying to blow them up. And
Well, let's dive into that because I think you are right. That was look, I think activist short selling had existed prior. The issue is there were less venues to be public with activism. So, I began as a short seller in 1997. There certainly weren't any of us going on the front page of the Wall Street Journal at the time, but a lot of the seeds were sown. It's just I think with the internet and everything, I think you're most well known for that. I think you've had a great career as a value manager and money manager as well. But maybe walk us through because while some of the audience will be familiar with your background, walk us through the genesis of that transformation and sort of your experiences. And I'm going to add two things here. For our listeners that are unfamiliar, what an activist short seller will do, and Gabriel did an incredible job of doing this, is go out and do the work and find like frauds, like companies that say they own 300 stores and they own 3 or things like that. Because believe it or not, this still happens. And then what they do is they gather that information and then they do take a position and they share it with the public, because people are literally being defrauded. It's a very research intensive, also, and maybe you'll talk a little bit about this, a little contentious and a bit dangerous would be the far underselling the dramatic nature of it. But I think it plays a pivotal role in the markets. And, it went through a period here in the last 15 years, really beginning in the late 2000s with a lot of the Chinese stuff, to be honest, where I think it came out of. But let's talk about that. And then what I want to do here, and those who've watched the HX podcast before, I think Gabrielle might have some unique insights on sort of, things that would be helpful for regular everyday investors to know. So I don't think that anyone who's our audience is going to go out there and become an activist short seller anytime soon. But I think it's almost like being in the extreme. It's almost like the restaurant business, working at the craziest 5-star French Michelin star restaurant in the world. Maybe won't help you make a grilled cheese, but you're going to learn some things that are going to be useful, in everyday cooking and all that. But walk us through the genesis and a little bit of the history, because I think it's totally fascinating.
yeah, it's very interesting also how it started. Again, I was only dreaming of creating no trouble for anyone and doing my Warren Buffett value investing thing, and everybody was happy. And obviously, this proved challenging because I was doing this in a post 2008 world and a post Madoff world, and both of the things conspired to make raising capital for a hedge fund incredibly challenging for new funds, and especially I didn't have the ideal pedigree for a hedge fund manager. I didn't have
Yeah.
much experience in that in the capital market, so it's not like KKR was lining up to give me money, basically.
Yeah.
And also, I started doing this out of Tel Aviv, Israel, which is not exactly New York or London. So that was the challenge. I needed something else. And what happened
You
is,
were a true outsider, by the way, just similar to me. Like, I mean, I had the benefit of having gone to Wharton undergrad, but I had no networks. I'm a poor Mexican Jew from Phoenix. Like, I didn't have, and I didn't work at a Tiger Cub or anything like that. So we shared that in terms
and
of
by the way,
my
that's,
time.
I think of the other people that I met, like you, for example, but I can tell you some others, if they manage to get a foot in the door in the industry, they end up doing very well. And there's a whole bunch of reasons why. Maybe we can explore those later. But the
Well, I
point is,
also, by the way, I spent 70% of my time on the short side, and I hadn't really thought about it, but to a certain extent, not to the extreme that you did, but I think it actually helped us when we were, fundraising, because I mean, we made 95% of our money on our longs, and I spent 20% of my time on my longs. I spent 80% of my time on the short side, but I think that because we were a rare breed, that people were like, well, I can find long guys all day long, but people who
right,
actually do real short work, there's only a handful of them, and I think it
I guess
helped.
80% of the assets you gather were coming goes on the short. I can relate. I think the percentages are correct even in my case.
Yep.
So basically, it all started because of two events that happened. The first event was the normal process of value investing. I was using just an automatic screening software, and I was
Okay.
screening for value stocks.
Okay.
Essentially, very simple, low price to earnings ratio, low EV to
Yep.
EBITDA, high margins, high returns on invested capital, low leverage, that sort of thing, and looking really for extreme undervaluations, which at the
Okay.
time, 2009, 10, 11, you could buy like single digits or 10 or
Yeah.
11 PEs, pretty good companies. And if you did this kind of screening in 2010, 2011, 2011, 2010, 2012 maybe, you would see that two-thirds of the companies that were coming out of those screens, they all tended to have China in its name.
Okay.
They
Okay.
were all
Interesting.
Chinese. They
Oh,
were
really?
Chinese
Huh.
companies that were trading on usually on Nasdaq or NYSE after a reverse merger. Okay,
Okay.
and at the time, it's only been like 10 or 11 or 12 years ago. It's not such a long time, but at the time, China didn't have the negative stigma that it has today. Actually, there was a lot
Okay.
of enthusiasm about China, even politically.
Yep.
And so the perception of China was, yeah, okay, it's this new world in which we don't know too much about it, but we do know that it's a huge market and that's growing very fast. So one time in particular, I zeroed in on one company called China Biotics. It was a small cap, maybe a billion market cap, something like that. And they
Okay.
were basically doing what was in their name. They were selling and producing and selling biotics in China, which is essentially probiotics. It's the stuff that you
Okay.
find in,
Okay.
like in yogurt, for example. They're supposed to
Yeah.
be
Yeah.
good for
Yeah.
you.
Yeah.
And
So
they were
it's
selling
sort of like a
supplements.
quasi healthcare company, like
Yeah,
so
yeah. It's kind of like a
nutraceuticals.
supplement. Yeah,
I think.
exactly.
Yeah. Yeah.
Exactly that.
Nutraceuticals, I think, is the Wall Street term for it. So yeah.
Exactly. And I think, that sounds nice. Selling that in China, it's a discretionary thing. It's considered to be healthy. It was growing at 20% per year, 10 PE, very nice. But even at the time, I thought it would have been unethical to buy something for the fund or for the managed account at the time without doing an in-depth due diligence. And you
Okay.
can
Yeah.
do
Of course.
that easily on a US or European company because you can see where the management went to school, what
Yeah.
companies were they managing before, what city they were from. You can maybe find interviews online on YouTube and get an idea of who the hell is managing this company.
And especially today versus 10 years ago, like even LinkedIn, like I think about where LinkedIn, like when I meet someone, I go to the LinkedIn and like you can learn, it's just like brrr, you get to know a lot. So
Yeah, yeah. But with Chinese things, you couldn't do it. I had no idea.
yep.
I had no way to conduct the due diligence. Basically, to do it, I couldn't do it from a desktop. but the value was so screaming, so interesting that I thought, okay, this company, if it's real, it's in 10 years going to be
Yeah.
worth 10 times. So I said, you know what? That's it. I'm going to go to China. I'm going to meet the management. I'm going to see the
Okay.
offices. I'm going to visit the production
Uh-huh.
facilities. And I'm going to maybe visit the retailers that are supposed to be selling this stuff, as it says in the
Okay.
annual report. And if I find that everything is kosher, then I'll take a big position. As I was
Classic Peter Lynch style, like, go out
Peter
there,
Lynch,
visit
Philip
the company, the customers.
Fisher, right?
Yeah.
A little bit
Yeah.
of a minimum of scuttlebutt.
Yeah.
As I was preparing this trip, one day I walk into the office and I see the stock is down 50%. This is,
Okay.
thank God, before I took a position.
Okay.
And I said,
Okay.
what the hell?
Good. Great.
What the hell is going on? And then I realized that somebody, and with hindsight, that somebody ended up being Carousel Capital, Sama Drangi, if you're familiar with him. He was
Okay. Yeah.
also a
Carousel.
guest
Yep.
of Whitney during when we met each other.
Yep.
And again, this is a long time ago, like maybe 2010 or 11. And he set up a website saying China Biotics is a fraud.
Okay.
We tried to meet with the management, went on site. When they found out who we were, they wouldn't want to meet.
Right.
We tried to see the production facilities and the offices, but they wouldn't let us in. But we could tell from the building, which was located in a residential area in Shanghai, that the area could not have been more than a few hundred square meters, where after contacting an equivalent US company with that amount of volume, it would have required maybe 10 or 20,000 square meters of production facilities.
Yep.
And finally, we
Yep.
visited the retailers, and two out of three of the ones that were of the chains that were mentioned in the annual report didn't carry the product at all. One of the three
Yeah.
actually
Yeah.
had
Yeah.
the product, but they said that it was very slow moving, and it was they were selling a couple of boxes a month. Therefore, we believe it's a fraud. So this thing, one page on our website was enough to collapse the company. And so my first instinct was, oh my God, I was so lucky that I that I found out this way. The second instinct, and this actually happened after I had a similar experience with another company. This time it was attacked by Muddy Waters. It used to be called Rhino.
Okay. Yep.
I won't tell you the whole story, but it's very similar to the one I just told you. At some point, I realized, hey, that kind of due diligence that they did was pretty basic. And
Yep.
I've always liked intelligence gathering and investigations and all that. And so I thought I could have done a better job at extracting the information. For example, I thought I could have found a way to visit those offices, maybe undercover, in a way that they would have let me
Okay.
see them,
Okay.
and other stuff. And then the other thing that really gave me the idea is that shortly after that, again in 2011, I don't know if you were there, but I attended Whitney Tilson's Value Investing Congress in New York, in Times
Okay.
Square, and there were a bunch of hedge fund managers that I invited to talk. And I was very impressed by, at the time, Bill Ackman and David
Uh-huh.
Einhorn. Einhorn, I think, presented a short of White Mountain Coffee, and I don't remember.
Green Mountain Coffee.
Green Mountain,
Correct.
exactly.
Yep.
And Bill
Yeah,
Ackman
we
presented
were short.
some,
We were short at the same time, and I was
as
working.
did
He
David.
had a woman who worked with him out of Dallas that we were sharing information, like not illegally, but like going through and doing the research and like data points and stuff. So
Got it. So I saw that, and then shortly afterwards, I saw Bill Ackman's Herbalife campaign,
yep.
which was ultimately unsuccessful because he antagonized what is it called, his nemesis. I forgot the name.
Carl Icahn.
Yeah, Carl Icahn and a
Yeah.
couple of
Yeah.
others
Yeah.
that took the other side of the trade. But I was very impressed by the way he actually used the media to broadcast his idea, by the polished
Okay. Yeah.
presentation. I thought it was very professional. So the intuition that I had is, okay, if I try to kind of take the best of both approaches, in other words, find similar extreme fraudulent situations or criminal situations and collect a critical mass of damning information about this company by way of an in-depth investigation, and then presenting them in a very polished, media-conscious way, I think something very nice, a very nice result could happen. And so this was the idea that started growing in
Well,
my mind.
it's
Right?
funny. Let me editorialize it here a little bit. Like, you were hunting in many of the same places we were in the late 1990s. Like, I was pulling up when I'm not looking at you, I'm looking at my screen here. We were short something called PGRX, Profit Recovery Group, which
Hmm.
was they went out and bought recovery audits. They bought like files of monies that were owed. And there were a number of accounting services like CIFRA, actually, which now CFRA is this broadly diversified economics, but it was started by a guy named Howard Shillett, who focused on just accounting. And so there was a whole, like, and it really began in the 90s, a whole group of us screening for names where we're using accounting screens. WorldCom, which you may have you
Yeah,
remember,
of
MCI
course,
WorldCom
of
was a
course.
fascinating. We were short WorldCom in size because WorldCom showed a net income and EBITDA that went like this, and a CFFO. Actually, I'm on the screen here. That went cash flow from operations that just was collapsing. And so I'll tell you two things that changed. I'm going to go to a question that I have for you. One thing that changed. So I was short Enron. I was short WorldCom. I was short PGRX. I was like, I was involved in many of these. It started similar to you because I was long Rite Aid and I was long HFS, which were two Sendent, which were two huge blowups that I did right at the start of my career. Where I did the same thing. I bought it. The stocks looked cheap. There was a lot of controversy, and then I kind of learned the accounting, what to look for, the hard way because I
Hard
took
way.
these major losses. But so what I did notice, there's two differences between what I did for 15, 20 years and then kind of where you found yourself. Number one was the internet changed things. Back in the late 90s, we could find big companies that were engaging in, bullshit, and they could kind of get away with it. But as you went through the 90s and 2000s, there were more of us and there was just better ways to communicate. That actually shrunk the pool of opportunity. But then by the time I moved to much larger funds where it didn't pay as, it was more difficult. We never had the publicity opportunity, which, to be honest, who one of the people that first did that, in addition to Muddy Waters, et cetera, Whitney actually was one of the first managers that got very vocal. But I'm curious with your process, and then we're gonna skip ahead to like kind of what you learned and what you would share. How did you find the names that you thought might work? Because that well was so deep and rich in the 90s, and it sort of dried up across the 2000s. China was one place where it did rear its head, and a lot of the most famous guys came out of doing the China work.
And that too dried up
But
very quickly.
yeah, but then that dried up too. How did you screen for these? And I ask this because it also might be a lesson for people that are looking at small cap longs on what to avoid. Yeah, if you were going today to do it, and I know you're not as active anymore, how would you find these companies?
Well, by the way, we might get active. I just became very, very selective of what we
Okay,
take, and
okay,
this
got it.
selectivity may become infinite, and therefore we don't find anything. But
Yeah, yeah, yeah.
if the good one comes along, we'll do it. But
Right.
yes, in order to answer your question, I need to make a little premise. Sometimes you have a hedge fund that's looking for a strategy and a way to execute it, right? In that case, I was a strategy and an execution and a tactic, and I was looking for an hedge fund to do it. Meaning, what I really like to do is the investigation. I really like the
Yep.
detective work, and it doesn't matter
Yeah.
if you do it as police work or as a private investigator or as a hedge fund manager. What I really like the most of
Or as a
this,
reporter. A lot of
or as a
people came out
reporter,
of investigative
exactly.
journalism. My friend Herb Greenberg,
Exactly,
like,
exactly. I like that. That's what really gives me the thrills. And the
yeah.
reason why we eventually did activist short selling is because that's the best way to monetize it. Maybe in terms of making money, definitely not in terms of sleeping well at night because it creates some sort of
Yeah,
friction.
yeah.
But in any case, and I think that because of this, maybe I'm a bit better than average in doing the investigation. So my assumption was, hey, let's go around, and it's more likely that if there is something very wrong with a company, and we only intervene if we find extreme fraud. I don't care about
Okay.
weak business models or bad quarter. I
Yeah,
just
yeah, yeah.
want fraud and crime.
You
Okay,
want,
total fraud and
yeah.
crime.
So a lot of, and I want to add this here. So in our strategies, and a little bit of this has to do with scale because I was working at billion-dollar hedge funds. We focused on probably two different strategies. Number one,
Yes.
business cycles where, good companies can just suck for periods of time. I'm going to say something maybe controversial. Eventually, Nvidia is going to face a business cycle because of competition the same way Cisco did. And Nvidia is going to be a spectacular short. That doesn't mean that Nvidia isn't
Let
an
me let me know when that
awesome
time comes and you
company.
can sell in advance.
Right, yeah. But so those are kind of business cycle, and then we focused on secular shorts, which either could be things that were taken public with faulty premises or premises that didn't last very long or didn't scale, or the world just changed. Newspaper companies and things like
Melting
that.
ice cubes.
Yeah, melting ice cubes of different sorts. Both of them, the first kind, if you can find them, are very good and very scalable, but you only have them for a little while. The second just can become very crowded. The frauds in my world, like they went away. Like it was just like I couldn't. It was hard to find anything. And I guess
It's
you
because
were running a smaller fund.
I think it's because, yes, I think it's because they follow power law, the frauds. And by power law, I
Okay,
mean that um, smaller fraud are more frequent and larger
okay,
fraud are
okay.
less frequent and exponentially less frequent. You see what I mean? That's very important.
Yep.
And
That
it's the
makes
same
sense.
thing as earthquakes. You have, little shaky that you can barely tell. It happens thousands of times per day in the world. You can't even
Okay.
tell. And then you have social earthquake every once in a while. But, a 2004 or Fukushima type earthquake, it only happens
Yeah.
twice a century. It's the same thing with frauds. You have small frauds all the time, but Enron, MCR Walker, all those are very rare. And I would say
Yeah.
that it's even more rare now because after that they passed the Sarbanes-Oxley Act, which made it much tougher, at least in the United
They,
States,
they
to
they
conduct fraud.
they were still out there though. I had a 97-page report on Valiant where we went out and interviewed, I mean, hundreds and hundreds of customers, former employees, et cetera. So I think they are still out there, but it's more they're more
They're,
unicorns
they're more unique, and they also got
than
better.
anything
Let's say it.
else.
They got better at
Yeah,
hiding their stuff,
yeah,
and the proof of that is nobody went to jail for Valiant, as far as I know. So,
yeah.
in any case, so my assumption was, okay, I'm good at investigating, and finding these things is really hard. So if I need to find them out of the blue, I'm going to struggle. So what I did is,
Okay.
if a company is fraudulent enough, it's very likely that somebody else will have noticed this. And so what I said I was going to do was looking for newspaper articles, blogs, social media posts of somebody, some fund, some journalist, some analyst, that noticed that there is something wrong, but could not run the investigation. So all they did is essentially writing the red flags. You see what
Okay.
I mean?
Okay.
So you can probably say, "Hey, I think there is like you did with WorldCom. I noticed that there's a discrepancy. Revenue and profits keep going up, and margin keeps getting wider, but cash flow keeps getting deteriorating and more so over time."
Yeah.
That's a red flag.
Yeah.
You haven't proven anything yet, right? Because it could be that there is some legitimate, honest reason why that's happening, but you notice
Yeah. Yeah.
you notice an anomaly. Okay, so what I did is looking for stuff like that, or somebody that wrote something like that about WorldCom, but didn't have the patience or the stomach to, based on that, run a full investigation. And I said, I'm going to start from that discrepancy and a number of other discrepancies, and trying to see whether I can move from what I say from the red flags to the smoking guns. In other words,
Okay.
from
Okay. Yeah.
something that looks fishy to something that, in the eyes of the reasonable investor, it proves that there is a fraud beyond reasonable doubt. And I figured I'm going to do whatever legal action I can do
Yeah.
in order to find this information.
So
And
tell me, just for the sake of our audience, a lot of people aren't familiar with this stuff. Okay, so our audience is very sophisticated, but they're not professional money managers. What
sure.
are the give me maybe the two or three craziest stories that ever came out of your investigations? Because some of these are just, I mean, they're fucking insane. Just real quick, give me a couple of the craziest ones you ever saw.
Well, there were a lot of them. One, for example, a really interesting one was Afria, for example, Afria, which was a cannabis stock. And
Okay.
it turned out that what was happening is that management was, this is a Canadian company doing cannabis. Canada is not the ideal
Okay.
place for cannabis because it's cold. And
Okay.
and cannabis is a tropical plant. And also
Oh.
the costs are driven mostly by labor because it's labor intensive and
Okay.
electricity because again being a tropical plant it needs a lot of light and in
Yeah.
Canada you need
Yeah.
to use artificial light. So Canada is
Okay.
one of the places with the highest labor costs in the world and the most expensive electricity cost. So it was not actually very
Okay.
good. So what they did is they went on quote unquote M&A spree in Latin America and South America looking for other companies to buy in places such as Jamaica, Argentina, and Colombia, where theoretically they were looking for other successful cannabis companies to buy in places that were more cannabis friendly in terms of environment. In reality,
Okay.
the game that they were playing is that management, certain people from the management, would essentially go and buy themselves really tiny companies, like a
Yeah.
pharmacy, like a single retail outlet pharmacy, or maybe really small cannabis farms which were not even in operation because they didn't have permits to operate. They would buy them for themselves personally for peanuts, and then they would cause the public company that they were managing, they would cause it, they would essentially take themselves over at insane
Yep. Yep.
markups. So like 100 times more than what they paid only a few weeks before. And obviously they would change the name of the company they would buy and acquire so that this could not be visible from outside,
Got it.
from just looking at the papers.
So did you go visit the locations of the Argentine cannabis dispensary or whatever it was?
Yes, the
Or
idea. This
okay.
was in collaboration with Hindenburg Research, by the way,
Okay.
with
Okay.
Nate
Another
Anderson.
great research house. Yeah.
So we split the job. Essentially, he which was phenomenal in doing, you can call it desktop research. He basically managed to find all the papers that were proving that these acquisitions were made, when they were made, that they changed the name and
Okay.
all that, the people that were behind it. And all I did was, verifying and doing due diligence on the field and seeing exactly what they bought, what exactly were the assets, and who were the board members. And so what we saw is essentially what was to be a large distribution chain of pharmacy was actually one single pharmacy. And we got
Yeah. Yeah.
inside their warehouse with some subterfuge essentially. And similar thing in Jamaica, similar things in Colombia. And then the other funny thing is verifying who the board members were. And in these cases, I was very suspicious of the board members. So what we saw, the board members of these companies that were buying, some of them didn't exist. So what I did, I tried to
Okay.
track them down in Jamaica and all those places. So some of them didn't exist. And we would prove it by just visiting essentially their residential address and
Right. Right.
again,
Right. Right.
going and trying to meet them as an excuse. I'm going to tell you like some funny tricks that we use there. Jamaica and Kingston in particular is a very dangerous place. Until
It's
2013, they
it's
had
sketchy. We once got trapped there because like we showed up 3 hours or 4 hours before our flight. And because they were fuck ups, like we couldn't get on our fucking flight after I'm still pissed off about it. So we spent a night in Kingston, and I gotta tell you, it was sketchy. Like,
they used to have the world record of homicides in
yeah, yeah,
until 2013, I think. So it's not a safe place, and obviously roaming around without knowing the place, just asking for people who, by the way, were
yeah.
involved in criminal activity. It's not exactly. So what I did was this: I would essentially see where they were living. In some places, the address didn't exist, but in some other places, there was an address, and I want to tell where the person lived there, and it couldn't just come in. Just knock the door and say, "Hi, does this guy live here?"
Yeah,
So what I
yeah,
would
yeah.
do is I bought myself a cheap wallet and I filled it up with all sort of random stuff, and then I in the opening page of the wallet, I wrote, "If lost, please deliver back to this person at this address." So
Okay.
essentially, I would show up at the security guard or at the concierge with this address. Hey, I just found this thing, 20 meters away. I guess it must belong
Yeah,
to
yeah,
somebody
yeah.
living here. Does this person live here? And whether the security guard would either confirm or deny that the person lived there, and he had no reason
Okay.
to lie,
Okay.
right? Because I'm just bringing something there. Another
Yeah.
really
Yeah.
funny one that we used was this guy. Again, he was supposed to be a board member of a company in Jamaica, of a and I tried to track them down, and I found them, and he had a very distinctive name in the Bronx, in New York, in the Bronx. And I said, this
Okay.
that already is a little funny. So I went to his
So
residential address, and the guy was definitely living there, and I could not understand why this person from the Bronx was a board member in a company in Jamaica. So
right,
it
right,
was
right.
it was supposed to be somebody living in Jamaica. So I figured, okay, I need to make sure the same, but I don't want to write it down on the report unless I'm absolutely sure.
Yep.
And I had the way to be sure because I had his signature on
Okay.
the annual report of the company. So what I
Okay.
did
Okay.
is I took actually I won't say the name, but a friend of mine who Whitney Tilson know very well, and for a few times we went outside of his apartment just checking out whether we would meet him. And eventually we came up with this plan. We essentially posed as delivery boys, like UPS,
I was
something
gonna
like
say
that.
deliveryman
Yeah,
is what I had in my head, like
delivery
pizza
man.
delivery or something. Yeah,
We
yeah,
bought a huge box of Godiva chocolates. And this guy
yeah.
was kind of
Okay.
like an actor or a model, so he was a person,
Okay.
a semi-public person. And we just showed up at his door, with the hat and the delivery thing. They're
Yeah,
saying,
yeah,
"Hey,
yeah,
I
yeah.
just delivery for this guy. Oh, here it is. And by the way, do you mind signing for the delivery?" You see what
Yeah,
I mean?
yeah.
And then and please, the signature has to be legible. So we had the signature,
Right,
and then we
right.
could compare that signature with the signature that showed up on the annual report, and we knew it was the same
Wow,
person.
wow.
So we did
So,
this kind of
so
stuff, which was a lot of fun, I have to say.
two questions. Did you make money? Was that a successful one? It sounds like it was.
It was
What was the ticker of it again?
APHA.
APHA.
It was
And
eventually
then
taken over in distress by Tilray, who also ended up going in distress, if I remember
got
correctly.
it, got it. And then what was? And then we're gonna transition here in a second because I want to kind of give the big takeaways. What was the scariest thing that you ever ran into? Because the one thing for folks, like and look, I'm gonna editorialize here a little bit too. Short selling plays a vital role in the capital markets, in my opinion, because there were many investors that are in a lot of these stocks that are completely being defrauded. Short selling, like long buying, can also be abused. There are ways that people are doing, acting in ways that, even if not legal or certainly unethical, I think it kind of goes both ways. But I think Gabrielle, engaged in, and one of the things I was reading another interview with you, and your big thing was always do make sure everything's legal. And that's what I've always told people. People go, what kind of investor are you? I go, I'm a make money investor. I'll do anything as long as it's legal and ethical. Like because once you cross those boundaries, there's no going back. And you just need one even like whiff of a mistake can ruin your career on Wall Street.
Right.
People don't quite understand that. But what one thing I will say, and this is where I want to get into what was the most dangerous thing that ever happened to you, is that I want people to understand that you're dealing with people that often are actively engaged in fraud. So on the moral spectrum, they have chosen to violate the laws and actively do so. This means, in my opinion, that their view of the totality of the law of the legal system is fluid and makes them a little bit more dangerous than your average, CEO or board member at Philip Morris or something
Right.
like that. So what's the scariest thing that ever happened to you that you're willing to talk about?
Sure. I mean, during the information gathering phase, I haven't had any huge scares. And if you get scares, it means
Okay,
I did some mistakes in the mission planning. In other words, there is always a relatively low risk way to collect certain type of information, and the
okay,
challenge is to find it. So, for example, sometimes there is a very easy solution, and then you don't want to go the high risk. And usually, the solution is
Yep.
be very careful. Do understand who you study the target way beforehand, the people you're going to deal with, the place you're going to go, and then usually there is a way to do it that really lowers the risk to a minimum, even if you do it to a
Yep.
dangerous area. For example, when I went to do that thing in Kingston, I had a driver, like a local
Okay.
driver.
Okay.
He was not a bodyguard. I considered getting him a
Well,
bodyguard, but I don't think it was necessary. But I had the
I feel
driver.
like maybe being in the IDF and being a paratrooper taught you a little bit about like risk management in terms of like doing
Yes,
these things. So
exactly. You
like
said something correct. About risk
yeah,
management. It's not that I'm a hard target because I don't walk around with an M16. So it's not that. It's the idea that you can do things which are inherently very dangerous, but you can lower the risk to an acceptable level so that you can do them
right,
over and
right,
over without being reckless. And that I
yeah,
learned from
yeah,
the IDF, basically.
yeah,
So
yeah,
it's
yeah.
about
Oh, it's
risk
fascinating.
management,
That's fascinating.
even the operational risk management, basically. Okay.
So can I say something about that? I'm going to go because this is where we're going to go here in a second.
Right.
I think that's a great lesson for the stock market. And I'm going to go to an area that you're not involved in that is not your bailiwick. But when dealing with high risk stocks, I think that some high risk stocks also have very high reward. It's about the structuring of that idea. So we actually wrote up, believe it or not, this is going to blow your mind. You're going to be like, where did this conversation just go? We did a write up on GameStop on Friday because GameStop, not many people understand this. They just raised $3 billion. They're sitting on $4 billion of net cash. They've got a $200 million annual cash burn. GameStop, what it was 4 weeks ago and what it is today, are two
It's a
totally
different
different
animal.
animals. Like,
Hmm.
and I said there the same way I did with crypto with Bitcoin. I said if someone wanted to take a very small speculation in GameStop, 50 basis points, 1%. It's actually a pretty interesting bet because of this dynamic that's going on. But
It's like
it's
buying a
kind of getting to what
SPAC
you're
in a way,
saying.
right? It's kind of like
Well,
buying a SPAC. You're
it's
buying a
like a spec.
company with a lot of
It
liquidity, and you don't know exactly
well,
what they want to do.
and you've got this army of retail investors, but it's like, it's almost what you said. Here is one of the most dangerous situations in the world. GameStop has $9.50 of cash and is losing a little bit of money. The stock should probably be worth 8. It's trading at 28. But I think you could, but it's got a legitimate shot of trading to 50 or 100, given the dynamics that we've seen. There's a way to go into that incredibly dangerous situation and make an intelligent bet, and structure it intelligently. So I actually love that concept that you maybe got from the IDF of like, how do you do something inherently very risky, but try to give it the appropriate risk reward
Right.
in the process. So
Exactly. So,
yeah,
so the risk was not coming so much from the intelligence gathering part of the game, because again, it could be mitigated.
yeah,
It's coming afterwards, because then obviously,
okay.
and that's the weakness inherent in the activist shorts model, is that you have to come public by definition, and I don't like publishing anonymously,
Yep,
because
yep.
I don't know, it's just a matter of personality. I think that if you're judging another company, if you're judging the management, you have to do it with your face. But
All of
that
our social accounts are always my name is on everything. Like I never put anything out there in the public that doesn't have my name affiliated with it. If I don't feel strongly
look,
enough
there
to
are
put my
some
name on
perfectly
it,
good
don't
activist
say it.
short sellers that don't do it. By the way, there are some that publish
Yeah,
anonymously, and I understand them. But when they ask them, and when they ask me what I think, I always tell them I think you should put your name on it. A, because it will force you to have more discipline into what you write, and B, because
yeah.
if there are any real problems, in any case, you'll be exposed because there are ways
Okay.
of, and it always happens. Look at Wirecard or a bunch of other stocks. Usually, the moment this hits the courts, they'll find out who the person
Yeah,
is, and
yeah.
might as well use your name. But that obviously exposes you to retaliation from these guys,
Yeah.
and some companies choose to.
Publicity and legal. Yeah.
Yes, legal. Some of them retaliate legally, and this unfortunately this practice has become much more common now of actually suing the short sellers. In the overwhelming majority of cases, they're unsuccessful, but but they still cost a lot of money and time and anxiety
Stress.
and
No one wants to
stress.
be
Yeah,
sued.
definitely.
Like,
So that's one thing. The other retaliation is reputational. So if the company, you see, that's the problem. If the company is a good fraud, a successful fraud, it means that they're good at this at manipulating the media, or they'll have some
right.
journalists on their payroll, or some good PR firm. So they will use all of their PR mechanism to
Yeah.
hit you, right? And finally, it also happens that some of them can be physically dangerous
Yeah.
with death threats and stuff like that. So that can happen too.
Yeah,
So
yeah. Well, so let's do this. We're going to go. I wanted to actually spend that time going through your background here because it's unique. Like I probably have a unique background that I ran a short book of over $1 billion for several years. There are very few people on earth that ran $1 billion plus short book. I was short selling for 25 years. But you have a totally different background. I never, we did do site visits, but the level to which you were able to take it, first off, I love the model. It's a real service also. Like I think it's really doing something to the capital markets. But you have this totally unique background, so I wanted to focus on that. But what, let's say you have your cousin that comes up to you. It was Shavuot last week. Let's say you're getting together for Shavuot or whatever it is, Pesach, a couple months ago. And, your cousin says, Gabriel, like, I know you've been in the markets now for 20 years. I'm interested in the markets. I'm going to invest. Your first piece of advice, I'm sure all of us, is like, okay, what are your goals? And hire an investment advisor, because I'm not going to give you personal
by the
financial
way,
advice.
that's the first piece of advice I would say, but only for legal reasons. You see what I mean?
Okay. Okay. Yeah. No. I agree. Although sometimes I kind of don't want to have the conversation too. But if you were to get approached and with your unique view, and again, I go back to that one. Well, what's your goals? Because giving advice to a 20-year-old is different than giving advice to a 70-year-old. But I will say, like we discussed, we at HX Research have certain things that we say. Plan the trade the plan, that applies just as much to trading as it does investing, and just as much to a 20-year-old that it does a 70-year-old. What would be sort of 2, 3, 4 things that you take from your short selling experience, your value investing experience? What would what would be a couple quick guidelines that you would share from your decades of experience now?
By the way, let me tell, I love this saying of yours.
The plan of trade. It's a good
Yeah,
one. It's
I
a good
love
one.
it.
So
But no, forget the market. I think that's a good way in life too. It means
absolutely.
approach
Yeah.
everything you have to do every endeavor in life with planning, and then sticks to the damn plan.
Well, I'll
You
tell
know?
you our 3 real quick because I think you'll appreciate them. Do the work. Okay, you're always going to do better if you do a lot of work on something. Trade a lot or don't trade at all. Okay, what happens is people get caught in the middle. They sit there and go, "Oh, I'm a long-term investor," and then something goes wrong, and then they change the plan, and then now they're a trader. And then the last one is plan the trade the plan. Are kind of the 3 that we pull off the shelf. So yeah, what would you share with our audience?
Yeah, let me try to focus on things which are non-cliche, non-obvious, right? So that we
Okay,
can give some
yeah,
value added. So the first thing that I would say, being a short seller, and you know better than me because you've definitely shorted more, at least in terms of number of stock than me, maybe by 1 or 2 orders of magnitude. The stock market, the short selling is tough because stock market tends to go up, right? Would you agree with that very general thing? So the first lesson would be, in general, be in the market because the market goes up, and it goes up in
yep,
unpredictable ways, in a jumpy way. There's a lot of noise and there is short-term drawdowns and all that. But the first lesson is, if you can stomach the volatility, be in the market in one way or another, because there are strong forces that push those stock portfolio up over time. Again,
can,
no
can I
investment
share?
advice. Yeah, go ahead.
Can I share one thing with you? And look, the stock market is rigged to go up. You know why? Because as humans, we try to better ourselves and make things better for ourselves, and with democracies and economies and all this stuff. and there's a survivorship bias in the stock market. Remember, when you're short a stock, everyone who's involved and owns that stock and running the company is working against you. So you really, you can't just go out and short things. But I got a crazy stat for you. So the stock market, this was on something that Ben Carlson put up earlier today. There was Roger Federer was speaking at Dartmouth, and Roger Federer said he won 80% of his matches.
Oh, I saw
of
that.
all of the points, he played, he only won 54%. And what Ben does great stuff. I retweet his stuff all the time. He has this great statistic. The S&P 500 is up 52.4% of all days, but on average, it's up on an annual basis 70% of the time, and or 60. Yes, it's actually 71% of the time. And if you take rolling 20-year periods, it's up 100% of the time, including the Great Depression. So it's like, I get your point. Like, be in the game. Like, stay in the game. Like,
be in the game. Do it. The second thing also that you can learn from short selling is, I would say, you should develop a natural instinct to be very skeptical of hype, euphoria, the latest fads, sexy industry, get rich quickly. Everything that's shiny, that looks very sexy, or this really flamboyant, super optimistic statement by management. I'm not saying that they're all
too
bad.
easy, it probably is. Like,
Well, not only easy. I mean, you should be skeptical of this high emotional content. You see what I mean? It doesn't mean that it's always wrong. Sometimes, yes, you will lose on some great opportunities every once in a while. But I can tell you that I go fishing for frauds always in those kind of environments. And it's not a coincidence. It's that, that kind of environment tends to attract fraudsters for a whole bunch of reasons. So be very skeptical. And I would say, if as an investor, you tend to avoid those sectors and those situations altogether, most people will make net money out of doing this decision. If you say, okay, whatever is the latest fad now, don't do it. Okay. Why? Because there is a high likelihood that there is a fraud in there. And you're more likely to catch the fraud than not, because the fraud will be, by definition, the one that does the better marketing.
Yeah.
Okay.
Yeah. Well,
so that's the advice I would. Go ahead.
Going to that, because it's true not just for frauds. We threw a quote up there today on our Twitter and Instagram. A great company is not a great investment if you pay too much for the stock. And so that's like, it's the Buffett saying is, I'd rather buy, he wants to buy great companies, but I'd rather buy a great company at an appropriate price. I mean, actually, this is funny. It says, I'd rather buy a great company at a fair price than a bad company at a cheap price, is another one of the sayings. So valuation does matter, but I'm using valuation as a proxy for hype. And hype brings out both suboptimal entry points and frauds when it's out there. So
I agree. And again, sometimes this law is not a law. It's just a tendency that I notice. And some people, maybe you, I have to admit, I've seen a lot of the calls you did, and sometimes they were in sectors like this, and you got the call right. But it's not for everybody. I don't think everybody can do that. And especially if you're
it takes some skill.
It takes skills, and also it takes some emotional fortitude, because you're going to have more volatility in that kind of stuff, and a lot of people are going to get nervous when it goes down and going to fall. So that's another thing.
Yeah,
another
it takes a plan.
You should take in mind, and this sounds like a cliche, but it's so true. Distrust the sell-side analyst. In all the fraud that I've exposed, and you've seen some of them, the others anybody can see if they just Google it. And we expose relatively a lot. The analysts, the sell-side analysts, which are the people which were supposed to know the company inside out, were always on the wrong side of the battle. Right. Then they were supporting always the company, sometimes even after the company was confirmed a fraud. Why? The conflicts of interest are very strong. So it can be extremely skeptical of whatever analysts say. The other thing, this is obviously if you manage to have the capability of doing due diligence on whatever it is that you want to buy. And again, you don't have to do a full due diligence on every single detail, but you see that very often when you come across a good potential long opportunity, you'll think if it's an opportunity because you think it's undervalued. And it's always undervalued for a reason. That reason, it's something that the market is skeptical about or doesn't understand or maybe, okay. In some cases, even a retail investor will have the opportunity of determining for itself whether the reason is correct or not.
Yeah,
And
yeah. This
let me give you a really super easy example with a company that was accessible to everybody. I bought Microsoft stocks at $26.50 in early 2013. This
which one you
was
said Microsoft?
Microsoft. I
Yeah,
think it's at 450 now. I still own it, by the
yeah.
way. Um, and why did I buy it? At the time, the consensus was that Apple is coming in, and nobody's going to use Windows anymore, and Apple is going to eat their lunch. I'm simplifying a lot, but that is the case. You couldn't see this in the numbers because people had been saying that for a long time. And if you saw the earnings per share, they kept going up at a very healthy rate throughout. But I went to two people that I knew. I went to my father-in-law, who happens to be an IT manager, and I
Okay.
happened to go to the IT manager of the law firm that was renting me the office. And I just asked him, I said, listen, this Microsoft stock is very weak because everybody says that Apple is going to eat their lunch. Is there any truth in this? And both of them, they both told me, this is hogwash. No way. It's possible that people will buy an Apple computer for their home or even selected
Yeah,
industries. If
yeah,
you're an
yeah.
architect, you
But no
might get
one's
an
going to
Apple.
trade out.
But if
Yeah.
you go into enterprise, no way, because all the software of the high-level servers is all written by Microsoft. There is no way the moat is. They didn't speak in terms of moat, but they basically said there is no way that they're going to
Yeah, yeah.
lose that franchise, no matter what you say. And
Switching cost.
that was the number one reason. Yeah, switching cost. That's the reason why Microsoft was so cheap. Is people were expecting this shift that any IT manager, you didn't have to pay $2,000 an hour for a expert network company. Okay, my father-in-law told me this, and the IT
Well,
manager next door told me the same. So in that case, all of a sudden you could have. You could have done a little due diligence that would have to make a company that was a 20x at the end of the day.
and and
You know,
this one comes up over and over with people that we talk to that are smart, successful managers. Buy what you know, and it's not necessarily that you have to be a doctor to buy a biotech stock, but like if you can actually go out and create some sort of like knowledge, it's Peter Lynch, it's the classic, like he went and bought all up on. Okay, so we've got four things here. I actually love the first one coming from a professional short seller. Stay in the game. The market, time is your friend. I actually just wrote a note that's going to publish tomorrow, which mentioned Fukushima, by the way. It's so funny you mentioned Fukushima because I talk about when I got put out of business, it's talking about the concept that retail investors have permanent capital because it's their damn money. So they don't have to worry about an investor, with a 30-day lock pulling the money. But, stay in the game. Do the work, beware the hype. And, I would say this with the sell side, because I know a lot of very great, smart sell side analysts who do great jobs. I mean, but I would say don't rely solely on them. And if you have a high degree of skepticism, feel free to dismiss what they say. So I want to add a little bit more to it because I know some fantastic sell side analysts, but especially when you're dealing with the frauds.
And this is not even
Yeah.
specific to financial analysts. And the point here is some people, including me, by the way, they kind of have this bias. You could call it the expert bias. In other words,
Yeah.
you will say, hey, listen, decisions are made by really the highest possible level expert out there. And therefore, if they think that, is probably right. Okay. Why do I tell you this? In 2003, right before the invasion of Iraq, when they announced the invasion of Iraq, I remember
Yeah.
having read a few years before a book by Frederick Forsyth called The Fist of God. I don't know if you read it. If you
Okay.
haven't, it's a really nice novel.
I've heard of it, but yeah.
Very realistic. In any case, I won't tell you about the whole book. It's not important. But the important part is it was talking about the first war in the Gulf. And it was explaining, there was, I think, a fictional or non-fictional letter written by the head of the CIA, George Tenet, to James Baker, that was the
Okay.
Secretary of State at the time, telling to George H.W. Bush why it was not a good idea to invade Iraq and topple Saddam Hussein. And he basically said, if you do it, there are these three ethnicities which are at odds with each
Yep.
other. The Kurds, the Shia and the Sunni, they all hate each other. They're all held together by Saddam Hussein. If you go in there and you topple Saddam, a pro-Western democracy will not have the grip to keep these things together. It will all fall
Yeah.
apart and it will turn into a huge civil war that will make the Yugoslavian conflict pale, because this was in the early 90s. And I remember when they announced the invasion of Iraq, which, by the way, I admit it, I was actually pro for a whole bunch of
Yeah.
reasons,
Yeah.
not less. Okay, I thought my first thought was, well, I remember very well this analysis, which to me made a lot of sense. Why in the first Gulf War they didn't topple Saddam Hussein? And my first idea was probably they have some high level advisors which advise the president saying that now it's different. Those circumstances are no longer present on the field, and we have a strategy to get around that problem so that doomsday scenario will not happen. Guess what? That scenario happened immediately. So my initial instinct of a 20-something-year-old guy just watching TV, thinking, it doesn't sound to me like a good idea because that scenario was plausible, was the right one. And the experts were wrong. Now, this kind of occurrence happened to me over and over in life. So
Yeah.
the
Yeah.
takeout is, if you really have a rational understanding, evidence base of a situation, even if the consensus and even if the expert thinks something else, unless you really see why the other explanation is better than yours, stick to yours because it's more likely to be correct.
It's one of our rules. I actually call it the common sense test, which is like, and I've been through so many bubbles, but like I remember in the real estate bubble, there were people going out in Miami and putting deposits down on condos that hadn't yet been built, and then were selling the not yet bought condo deposit for 100% profits. I mean, and that you're just like, yeah, no, this is going to end badly. Like, just like, so we are gifted as human beings as an evolutionary survival mechanism with common goddamn sense. And, if you're facing something that, because I always do that when we look at growth names, I kind of take a step back and I go, does the idea actually make sense? Because I hear all, and we run into it all the time with science-based stuff. Like, I tell people, like, with things like we're talking about small nuclear reactors right now, SMRs, and my because we do a lot of nuclear. We've got a very successful nuclear idea. It's still a value stock. You should buy it. We'll talk about it. It's my free idea. Go check it out, TLNE. But I say I'd rather, with that kind of stuff, and it's true of cannabis too, I'd rather buy a $10 or $15 billion company than I would a $500 million company. And the reason is I want to see it proven out and actually show some scale. So I might lose the first 10 bagger of it, but I'm going to play for the next 5 to 10 bag. And my friend Rom, he basically said this. He goes, the sweet spot in technology is actually 5 to 15 billion because you've de-risked enough. It's shown enough progress. There could be frauds at that level too, but it's a lot harder to be a fraud or a totally flawed business model at an $8 billion market cap than it is at an 800 million. Yeah, it doesn't mean it doesn't happen, but just goddamn common sense. Gabriel, thank you so much for joining us. It's a great honor. You do some fantastic work. I don't want to say I'm proud of you, but I met you, very early on. You always struck me as a smart, diligent guy. And what I saw you do afterwards, I was just like, wow, that fucking guy, he's gone down a road and just advanced it in a way. So I was very proud to have met you early on and then see what you've become.
Really good mentors, including you.
Yeah, as a manager. So and great, so Gabriel doesn't really do things publicly. He does have a Twitter account, Quintessential QCM Funds. You can check his stuff out. But I will say this: if he does decide to do something again, where he goes out on public, listen to this man. I would literally, for me personally, if he said it, and let's say I was involved in that stock, I'd just move on. It's not worth it.
You didn't learn the lesson. You didn't learn the lesson.
Yeah.
Read the reports and then make up your own mind based on logic. Maybe you have a better logic than me.
I'm gonna, you know what though, Gabriel? I hear you, but I'm also at an age where I've learned to find great people that I listen to. And unless I was a member of that company or had some huge tax gain or whatever, if you come out and say it, I'm just getting the fuck out. It's not worth it. Like you're not there by accident. You're not throwing darts at a friggin' board. And and that's the same thing that we say to people why they should subscribe to HX Research. I've done this my entire life. I've done it for 30 years. I have everything riding on my ideas. That doesn't mean I'm right all the time. I'm wrong, quite a bit. I know how to deal with my losses, but yeah. So thanks, Gabriel. We appreciate it, and please, we appreciate your support for the HX podcast, and we look forward to speaking with you all again soon.
Thank you very much. Have a great day.